Well, I think it's the military industrial complex that's done it. And silverwars.org has done a decent job of showing the amount of silver that is used in high tech weaponry. I did 3 years ago, I did a speech at Vancouver Resource Investment Conference where I said there's 500 ounces in a typical cruise missile. And
Right.
I'm walking off the stage and people come up to me and this guy says, I work for the Department of Defense. I'm like, oh shit. And he says, but I developed the Tomahawk. He says, I know there's silver in it. I don't know how much. I'll get back to you. Never hear from him again. 2 years ago, I go and I do another speech. There he is with some pictures in hand. He says, these are declassified. I can show you. You're right. There's about 13 to 14 kilograms in the tip of a typical cruise missile. And we went into a long conversation. I've talked to him many times since about the amount of silver that is used in high-tech weaponry, aerospace, and high-tech missiles. It's pervasive. Now, they used to show the amount of silver in the supply-demand numbers for a very long time. They showed the military application in it. And so when you realize that the military industrial complex, let's just call them BlackRock, who is the primary custodian along with JP Morgan for the world's largest silver trust in SLV, not to mention primary also now in GLD along with JP Morgan. So you have this company who's massively involved in the silver industry PSLV and SLV and others. And they're the ones who are stepping on the price of silver to keep it cheap so that they can build high-tech weapons, great
Wow.
weapons, and sell them all around the world to countries like the Ukraine. The Ukraine gets blown up, and then the military-industrial complex comes in because they already own all the weapons manufacturers. Who do you think gets the reconstruction contracts? Oh, that's right, it's BlackRock. So BlackRock comes in, sells weapons all around the world, keeps the price down, enriching the military-industrial complex, and then they get the reconstruction contracts to rebuild. This is a game that has been going on for a very long time. And if you go back and look at, I think it's in 1942. I don't know if I can give you the number. I think I can. The name of the bill was S.2768.
Okay.
S.2768, and it says this is in 1942. It's a subcommittee on banking and currency. And it's a bill to authorize the use for war purposes of silver held or owned by the United States. I'll read the first paragraph. The present consumption of silver for war purposes is at the rate of about 100 million ounces per year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will increase sufficiently to require at least 200 million ounces a year. Well, this is in 1942. What do you think it's like now with the high-tech weapons? So the question is, why would we have 8 banks that hold the largest concentrated short position on COMEX of any commodity traded in silver? It is because the military-industrial complex needs it to wage war and then to get the reconstruction contracts. In
Wow.
essence, to me, that is why they've been holding it down. And in an environment where no one stands for delivery, that wins. But the countries that are now doing it were not where they are now. Now they are coordinated, sophisticated, motivated, wealthy. These are the countries of the BRICS nations, China and Saudi Arabia and Russia and India. They're all gobbling up silver because they understand the long-term implications of an asset that is depleting in nature. And it is needed for the West to wage war and to create high-tech weapons. And that, in my mind, is why you've had the coordination of these Western banks who have ruled the roost through military supremacy and the ability to control the markets for a very long time. And silver and gold are the canary in the mine shaft. And they've done a good job at suppressing it. I do believe they've just about lost control of gold. Silver is still in the grips of the banks, but it's a very dangerous game when you have these delivery requests, which are accelerating. And look at the LBMA. They're a T+1 settlement market. T is the trade day plus 1 is the settlement. You get your bars moving on the third day. They've been as long as T+8 weeks because they say there's a shortage of manpower and trucks in order to move the bars around. So you're telling me the Bank of England and the LBMA doesn't have enough trucks and manpower to move my silver that I own? Really? It's going to be 8 weeks, not 3 days? So there's a lot going on, but I think it's a lot deeper than I would attribute to fundamentals, to market dynamics. It's a lot more. And it's about the West's desire to make high-tech weapons, if I had to guess. But
Yeah.
not only that, I don't mean to interrupt you. Please
No, it's
forgive
okay.
me. But gold and silver are unusual in the respect that there's greater demand as the price goes higher. And a lot of times the price goes so high in assets that, you start to see people selling. As the price of silver goes higher, you get more and more demand. And they say there's no bull market like a metals bull market because it's not greed motivated. People realize that there really are problems when the prices start to move higher and they don't sell. There's no secondary market. So by letting the price not go high, regardless of the fundamentals, by stepping on the price, what you do is you keep the public at bay and looking elsewhere, and all of us very, very frustrated. I know that, a year ago you had a full head of hair, long hair, and you've started to pull it out because of it. I'm teasing. I used to not be gray, and I get it. It's been a frustrating experience, but in the end, you can see by the deliveries by the most well-informed traders in the globe. Forget about the wealthiest; they are, but they're the most well-informed, and the amount of effort that is being used not only to hold it down but to fight against it and take delivery is unprecedented. And we're getting to that point where the rubber will meet the road, where these suppressors will be challenged. And I think that you need to have strong fingertips, trust your gut, hang on, don't let go.
All right, let's roll up our sleeves, my friends, because I want to have a real heart-to-heart today. And I don't mean some slick CNBC segment where they spend 4 minutes talking over pretty charts. I mean a grown-up conversation about the truth of what's happening to our money, to our financial system, and why silver, yes, silver, might just be the most asymmetric, misunderstood opportunity on the planet today. And when I say asymmetric, what do I mean? It's real simple. Low downside, monster upside. That's it. You don't get setups like this often in life. They're rare, and that's what makes this so special. Now, sure, we can start with the easy headline numbers, like the fact that silver is still, after all this monetary insanity, after $34 trillion in U.S. federal debt, after a global sovereign debt pile north of $300 trillion, trading for less than $40 an ounce. You could make a case it should be 10 times that if you just inflation adjust it from its 1980 spike. And you'd be right. But it goes so much deeper. Because this is not just about a metal that's historically cheap. It's about a metal that is critical to the entire future of technology. And, here's the kicker, critical to the future of war. People don't talk about this enough. In fact, a lot of folks roll their eyes when I bring it up. But let me tell you a quick story. 3 years ago, I'm up in Vancouver giving a talk at the Resource Investment Conference. Big crowd, lots of gold bugs, silver folks, you know the types. And in that speech, I said something that honestly was probably the most important line of my whole presentation, that there's roughly 500 ounces of silver in a typical modern cruise missile. I get off the stage, start shaking hands, and this gentleman walks up to me, says he works with the Department of Defense, and right away I think, what did I say? Well, turns out he helped develop the Tomahawk. He told me point blank, Andy, I know there's silver in it, I just don't know how much. Let me get back to you. And then, classic government, he vanishes. 2 years go by, I'm back in Vancouver, same conference, same crowd. And there he is with a little grin on his face and some pictures in hand. He says, Andy, these are declassified, I can show you. You were right. In fact, it's closer to 13 to 14 kilograms of silver in the tip of a typical cruise missile. Now think about that. That's nearly 450 ounces in one missile. Now think about how many of these things get built, tested, sold, fired, replaced. It's staggering. And we're not even counting the silver that goes into drones, guidance systems, electromagnetic warfare platforms, advanced comms, satellites, radar. The modern military is an absolute silver junkie. You want more evidence? Go back to World War II. The United States actually passed a bill, S-2768, in 1942, authorizing the massive use of silver for war. The War Production Board itself said they'd burn through 100 million ounces of silver a year, rapidly heading toward 200 million. That's 1942. What do you think it looks like now? With all the smart weapons, the microcircuitry, the high-frequency radar? And here's where it gets spicy. Who's keeping the price of silver down? Well, let's follow the breadcrumbs. Who are the primary custodians of the world's largest silver ETF, SLV? That's right, BlackRock and JP Morgan. They also run GLD. Now, these two are massively tied into the same institutions that are tied into the military-industrial complex. And what's the best way to keep your input costs down on critical war materials? You keep the price suppressed. If silver truly reflected its strategic importance, if the market was allowed to clear without this insane COMEX shorting, we'd be looking at a price multiples higher. Look, I'm not big on conspiracies, but I am big on incentives. And the incentives here are crystal clear. Suppress the price of silver, load up on high-tech weapons, sell them all over the world, then scoop up the reconstruction contracts. It's a perfect racket. Ukraine's a poster child for this. First, you sell them the arms, then after everything gets flattened, you sell them the rebuild. It's BlackRock from top to bottom. Meanwhile, retail investors and ordinary folks get shaken out of their silver positions. They watch price manipulated lower, they lose heart, they move on to whatever new shiny thing is trending on Reddit. Meanwhile, the most informed players in the world keep accumulating because they understand silver isn't just a monetary hedge. It's strategic, it's survival. That's the thing with gold and silver bull markets. They're not like tech stocks. When they go, it's not greed that drives them, it's fear. And fear-driven markets don't behave rationally. They blow out old highs, they suck in new money, they trap shorts, they trigger forced covering. And the irony? The higher the price goes, the more people want in. It's the opposite of most assets. There is no bull market quite like a metals bull market, because it's not about making money. It's about not losing everything else. So yeah, this has been a long, frustrating haul. I know it. I've been at this 35 years. I've watched people lose patience. I've watched them get lured into cryptomanias, meme stocks, ARK ETFs, only to come limping back later when the dust settled. Meanwhile, gold and silver just quietly keep doing what they've done for thousands of years. Preserve purchasing power through every regime change, currency collapse, and financial wipeout.
I think of silver, Ivan, I think of the word asymmetrical. I think it's the most undervalued asset on the planet. And asymmetrical means low downside, high upside. It's an unusual situation. And I think that really is the case. Part of what I think is giving away the real potential for silver is the massive, massive deliveries that we've seen month over month over month on COMEX. In fact, we saw the largest delivery in the history of the COMEX in silver in May. And it's a game where you have currently the second largest concentrated short position in history by the commercial banks right now. To give you an idea of how they do that, on Wednesday of last week, they traded 487 million paper ounces just to keep the price at or around $36 an ounce. And it popped back up on Friday. They traded 356 million paper ounces to hold the price below 37. So the total short position in silver right now is somewhere about 957 million ounces. How much of it is it a naked short? I don't know. Chris Marcus had a great article the other day. He said, look, when these banks on COMEX are short, they're supposed to be long the corresponding amount in London to balance their balance sheet. But the thing is, he said, if that really is the case, when looking at what they call the free float in London, the amount of silver backing the contracts, he surmised they would only have 7 million ounces. That's it in London backing the whole system. And if they are not hedged as they should be, why then you have some massively dangerous positions by some of the largest banks in the world, which represent an existential threat to the system. So when I look at silver, aside from the fact that we saw its highest weekly close in 14 years, only the third time in history it's been that high, you can see there's a concerted effort by the banks, a real concerted effort to keep it from rising. They failed in gold. I believe they'll fail in silver as well. I get it. The thing that's concerning to me regarding the crypto community, I've done this for 35 years, and I guess unless the rules are completely being rewritten, well, maybe they are. My mentor, Richard Russell, used to say that if you make 7% a year return, that you will go down in the investing Hall of Fame as a rock star. And what has happened with the gambling mentality from, Texas Hold'em to all the way up to the gambling, what is in the equity markets and in the crypto markets, it's created I believe, a whole generation of investors who have irrational expectations. And, they've been right to a degree. Fortunes have been made in cryptocurrencies. Will it continue to be? I don't know. When you look at what the largest banks in the world are doing, the largest central banks, they're accumulating gold and silver. And if it weren't so important, I guess really the interesting thing is that if it wasn't so important, for whatever reason.
So let's pick this up right where we left off. Because everything I just laid out for you in part one, the structural suppression of silver, the breathtaking concentration of short positions, the geopolitical maneuvering of the BRICS, the implications of Basel III, that's only the first layer. It gets deeper, much deeper. And when you really start to see it, you understand why I say over and over, this is the greatest transfer of wealth any of us will ever witness in our lifetimes. The key is to be on the right side of it. Now look, I want to go back to something that seems small, but it's actually enormous. The LBMA's inability to meet T+1 delivery schedules. I know it sounds like boring settlement mechanics, but this is the canary in the coal mine. This is where the paper promise meets the cold, hard metal, and suddenly the story changes. Because for decades, the LBMA operated on a fractional reserve system that was frankly more egregious than anything we've seen in the commercial banking system. They relied on what's called unallocated accounts. That means you didn't really own a specific bar of gold or silver. You owned a promise that somewhere, somehow, there was metal vaguely connected to you. The LBMA loved it because it meant they could multiply claims on the same ounce many times over. But Basel III changed that game. The new rules, finally after years of being lobbied to delay, dilute, or dismantle them, forced banks to treat unallocated gold differently on their balance sheets. Suddenly it's not Tier 1. Suddenly there are capital charges. Suddenly it gets expensive to keep playing these musical chairs. And the result is simple. The physical market is starting to matter again. Now here's the kicker. Who's forcing it? Who's actually pulling the strings behind this reassertion of reality into a fantasy paper world? It's not Washington. It's not London. It's Beijing. It's Moscow. It's Riyadh. The so-called West has been perfectly happy to let the manipulation run forever. It's the East that decided enough was enough. They're standing for delivery, forcing allocated settlements, draining the LBMA and COMEX inventories month after month. People will ask me, Andy, why is the West willing to sell its physical at these prices if it's so obviously undervalued? The answer is heartbreaking, because they don't see gold and silver as strategic monetary reserves anymore. They see them as quaint relics. The West wants digital everything. Digital dollars, CBDCs, control grids, transactional visibility. Meanwhile, China is building massive gold stockpiles behind the scenes, buying ore and concentrates directly from miners to mask the real volume, locking up future supply through bilateral deals in Africa and Latin America. Russia's doing the same, sidestepping SWIFT with gold settlements. Saudi Arabia is inking contracts payable in gold-weighted oil. The world's pivoting to hard assets. And the West, en masse led by the US, is still trying to squeeze the last drops out of its financialized paper empire. Now let's zoom in on COMEX. You know, last month I was running some back-of-the-envelope math. The total commercial net short position on silver is hovering around 957 million ounces. Meanwhile, COMEX registered inventories are only about 32 million ounces. That's a ratio of roughly 30-1. In other words, for every ounce of physical silver in the vault, there are 30 ounces worth of paper claims. If even 5% of long contract holders stood for delivery, the system would break. Full stop. And the funny, or tragic thing, most investors still don't have a clue. They're chasing Nvidia at 30 times sales, or meme coins with dog faces, or houses at a 40% premium to their long-term price-to-income ratios. Meanwhile, silver sits there, hated, ignored, with the most bullish structural backdrop in history. Now, I said it before, the most informed people on the planet are not the talking heads on CNBC. They're not even most hedge fund managers. The most informed are the central banks. They know the game. And what have they been doing? Buying gold at the fastest pace in 55 years, 1,082 metric tons last year alone, the highest since they stopped reporting honestly in the 1960s. Why? Because they see what's coming. They're not buying treasuries anymore. They're buying gold. And this is critical. Central banks aren't traders. They're not looking to flip gold at $3,600 for a quick buck. They're strategic. They're buying for sovereignty insurance, for monetary resets, for what comes after the debt supercycle finally topples under its own weight. Speaking of which, let's talk debt. The U.S. debt is now north of $34 trillion. That's just federal. Total debt, public and private, is over $100 trillion. We're adding debt at a rate of $1 trillion every 100 days. The Congressional Budget Office can barely keep up with revising its projections higher. Now ask yourself, how do you ever normalize interest rates again in that environment? You can't. The only way to manage that kind of debt is financial repression. Keep rates artificially low, inflate away the debt in real terms, hope nobody notices their dollars by half as much next decade as they do now. It's the oldest trick in the book. The Romans did it by clipping coins. We do it by printing digital ones. Same scam, different millennium. And where does that leave you? Well, if your wealth is denominated in dollars, euros, yen, congratulations. You're the patsy at the table. Because the one immutable law of the financial world is this: if you don't know who the sucker is, it's you. Now, I want to pivot to something we've been tracking closely, the military dimension of silver demand. We already talked about cruise missiles in that conversation with the duty engineer, but look at what's happening globally. Every major military power is rearming. NATO budgets are surging. Russia's on a wartime industrial footing. China's building more ships than the entire rest of the world combined. These aren't just lines on a chart. They're silver demand in the form of microelectronics, high-frequency circuits, radar-absorbing stealth materials. And the military doesn't care if silver is $30 or $300. They'll pay whatever it takes. Because their alternatives are simple: pay up or lose the next war. That's why I believe silver is not just another commodity. It's a strategic choke point. And once markets realize that, watch out. Now let me sprinkle in a little humor, because I know some of you are probably gripping your chair too hard right now. I got an email last week from a guy who said, "Andy, if silver is such a no-brainer, why isn't my neighbor talking about it over the barbecue?" I wrote him back and said, if your neighbor was talking about it, I'd be worried. By the time it's backyard barbecue talk, it's too late. You want to be the guy who bought Apple in 2003, not 2021. You want to be the guy who bought farmland before Bill Gates did. You want to own silver before your brother-in-law with the meme stocks figures it out. That's the heart of it. You want to buy value where it's ignored, hated, misunderstood, not where it's splashed across every glossy magazine cover. And right now, silver is so underowned, it's almost comical. If global financial assets are roughly $500 trillion, all the investment-grade silver in the world is worth less than $70 billion. That's a rounding error. If institutional capital decides to move just a fraction of a percent into silver, the market would break. It's that thin. Meanwhile, the COMEX is stuck desperately trying to suppress it. They flood the market with paper contracts, hoping to scare off momentum. But each time they do, more metal quietly gets siphoned out of the system by smart money. It's like trying to hold a beach ball underwater. The deeper you push, the harder it explodes when it finally breaks free. So where does this end? I can't give you a precise date. Anyone who tells you they can is either lying or selling something they shouldn't be. But I can tell you the trajectory is clear. The monetary system is unstable. The debt can't be repaid in real terms. Inflation isn't transitory, it's policy. And the countries that run the world's factories, the world's oil fields, the world's supply chains are all telling you through their actions. The future is gold, silver, and commodities, not unbacked paper promises. Which brings me to the most important point I can make. You do not own silver to get rich. You own silver so you're not destroyed when everything else implodes. It's the insurance that lets you sleep at night. Now, if it also goes up 5x or 10x, which I believe it will, that's icing on the cake. But you didn't buy car insurance hoping your car would crash. You bought it in case it did. Same thing here. That said, and I want to be very clear, there will come a time when silver is wildly overvalued, when everyone is talking about it. When people are cashing out their 401ks to buy monster boxes, that's when you sell. Not now. Now is when you hunker down, accumulate, and wait. Because the forces converging on this market are bigger than any of us. They're geopolitical, military, monetary. They involve trillions in mispriced paper promises, decades of structural manipulation, and a global pivot away from fiat toward hard assets. That story doesn't end with silver at $36. It ends with silver at a level that seems impossible today. And when it gets there, you'll look back at these days and wish you'd done more. So hold your silver, hold your gold, keep your powder dry. Don't get shaken out by day-to-day volatility. The banks that are shorting silver, they're praying you'll sell. The countries hoarding it, they're hoping you don't notice. Don't give them the satisfaction.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.